Welcome to Finance in 5. So no sooner had I uploaded my most recent video in which Michael Burry advised Elon Musk offer up his shares to the market at their current ridiculous price than I noticed this. An article which describes how Tesla is going to raise $5 billion through an offering of its common stock. It's capitalizing on a soaring share price following its inclusion in the S&P 500. The funds raised from the at-the-money offering will be used to shore up the electric vehicle maker's balance sheet, according to a regulatory filing out on Tuesday. Tesla had $8 billion in debt, excluding vehicle and energy financing. Wedbush analyst calls it another smart strategic move, and it keeps the price target at $1,000. Shares fell as much as 3.2% ahead of the opening bell. And then there's a separate article describing how Tesla has joined an ultra-small exclusive club. And in the previous video, I did mention how Tesla is one of the 5 big tech companies. And here you can see roughly what that means in terms of market caps of them. Apple at 2.1 trillion, Microsoft 1.6 trillion, Amazon 1.5 trillion. And then you've got Facebook and Tesla rounding out the top 5. And these have a smaller market cap in the $600 billion range. It won't be until December the 21st, according to this article, that Tesla finally gets included in the S&P 500 list. The stock has been pushed to highs of $641.76 per share, growing the market cap by $221.49 billion. And this is hitting short sellers hard, like this Jim Chanos guy who now is bearish about his bearishness. Which almost begs the question, was Michael Burry acting against his own interests by suggesting that Elon Musk did a stock offering of this nature? Maybe, maybe not. In theory, it shouldn't make any difference to the long-term price potential of the stock.
Earlier in the hour, we reported that longtime Tesla naysayer Jim Chanos was beginning to turn away from his bearish ways and reduce his short position in the electric vehicle maker. And let's get to Charlie Gasparino, who actually has been speaking with Jim Chanos. What did he say, Charlie?
Well, conversing via amorphous texts. I should point out that I've interviewed Jim many times on Tesla and trying to get my hands around his position on this, which was a max short position. That means he was short the max he does in his Kinecos hedge fund. And I always raised the question with him, how do you short a stock that is boosted by a combination of irrational exuberance, government handouts, and a cult? And he could never really answer that question, in my view, right. He's right maybe on the metrics, on the financials, but he could never answer that question until today. He did answer that question when he said it's really impossible to short this stock right now. It is, he says he's reduced his position. He still has a small short position. He reduced it, but it's telling, Liz, this stock was one of the most controversial stocks over the last 4 years. You and I have reported the travails of Elon Musk. Jim Chanos doesn't believe this stock's a zero anymore, and that's saying a lot about this company. Now, that doesn't mean that the company's out of the woods. That doesn't mean that the financials all of a sudden look great. But, it's hard to short a phenomenon. And, Tesla was the first EV essentially out of the gate. It produces a decent car. Jim also took issue with the production of the cars. He didn't think they were very good cars. I hear otherwise. You put all that together, plus ample government handouts, and, as Jim would say, it's an impossible short. And what he's doing now is looking at other companies around Tesla to short. And again, he's always said that Tesla is a zero. He doesn't think it's a zero anymore, obviously. And, but as you know, Liz, the final chapter on Tesla has not been written. There's going to be more on this. This company still has balance sheet issues.
So what are some of those balance sheet issues? Well, we can see their total liabilities have increased year on year. Tesla is spending more and more every year on things like machinery, and its total debt burden, as shown by these lines, is going up as well each year. There's an article here talking about how Tesla's junk rating may be due for upgrade after cash pile swells. This is over 6 months old, so it's not necessarily relevant now. But here's a quote from Burry, again from yesterday. 100-year flood coming, and for similar reasons, Tesla could be the next RCA. What is RCA? Radio Corporation of America. Here we see its share price between the years of 1925 and 1934. Spiked massively, then collapsed. And who knows if this will be prescient. This is a quote about David Sarnoff, who created this massive media empire, which later collapsed, this RCA. And it's often worth looking at history, because back then, probably nobody expected that this guy from a Jewish family, presumably, yeah, of course, was necessarily going to fail after he started this enormously successful media conglomerate, but that appears to have been what happened. And next we have a look here and we see that Tesla apparently has been delivering in spite of the pandemic, and the article talks here about how it's doing really well. It's selling 139,300 vehicles were sold by Tesla in the third quarter, smashing its previous record, according to this particular piece. Which unfortunately is still far short of massive automakers like Toyota, who usually produce at least 11 million cars per year. Then we see in this article, Warren Buffett gives his take on Elon Musk. He mentions he doesn't want to be baited by asking for an opinion about him. At the same time, he also discloses that he won't ever be investing personally in Tesla. And that's because of the fact that he recognizes that Tesla's share price is too high and that there's no value there, but also it could be because of the fact that Warren Buffett doesn't really like to invest in technology brands, as many of us are already aware. And many people are aware of the fact that Elon Musk owns about 20% of Tesla shares, and what he's doing apparently is borrowing money against the value of his Tesla stock and using a large portion of that money to purchase extra Tesla shares, which apparently is raising a lot of eyebrows. But separately from issues of corporate governance, there are news reports about Tesla's Supercharger capability and how other electric car manufacturers are going to be utilizing Tesla's Superchargers to actually be able to provide them with battery power. And here we have a YouTube video which actually gives a little bit more of a glimpse into this. We've got this 3-wheel automated electronic vehicle. To me, it does look a little bit strange. I don't know if you agree with me on this, but my perspective here, just looking at the drive of this vehicle, is that if you're somebody who's more than about 5'5", you're really going to struggle to actually sit inside. I could be wrong. It doesn't look to me as though there's a great deal of leg room. They seem to be showing more of the scenery as opposed to the car. It just looks a little bit too much like a Reliant Robin. I know that this isn't something that Tesla is selling, but the fact that Tesla will be providing the Supercharger infrastructure that will enable the charging of these Aptera Motors 3-wheeled solar-powered vehicles is another feather in the cap of Tesla, according to many analysts who are so bullish on this company over the long term. The fact that I think it looks a little bit like the Pope's golfing buggy, but without the glamour, is probably completely irrelevant. Tesla recently announced installation of its 20,000th Supercharger. This is the world's fastest charging network, according to Elon Musk, and the company has been looking to expand it aggressively, particularly in urban centers. However, the speed at which it has been able to implement this goal has been slower than many in Tesla would have wanted or anticipated or hoped for. Turning again briefly to the share price, we see it dipped a little bit, but it's been holding steady for the last couple of days. So what do the so-called experts think? Well, naturally, they all have different opinions. Here we've got Goldman Sachs saying buy, we've got Citigroup saying sell, we've got Morgan Stanley saying we don't know either way. Nobody really is sure about whether you should hold this stock or get rid of it completely from your portfolio. And the price target within 3 years, according to a group called Munster here, is $2,500. And this is because an analyst who spoke to CNBC told them that Elon has recently said that 30 to 40% of the value of the car could be in insurance, which means that they can start to offer their own insurance and improve their margins because it's a high margin revenue opportunity for them. So who knows whether or not that will be true. I personally think that there's going to be too much competition from other automakers who can do the same thing but far more cheaply. And a lot of other viewers of this channel believe the same. Competitors such as Porsche, Volvo, Audi, and many others are going to be able to step into the fray here and offer something far more competitive and useful for customers than Tesla can. So I'm just going to mention briefly a company which I did a video about 5 months ago, Freeport McMaron, which is a copper mine essentially. Look at how much the stock price has gone up over the course of the last few months. It was already the case that it had gone up a little bit when I did the video, but now it's really ballooned. And there will be people watching this who think, well, great, you recommended a stock I didn't buy, it's too late for me. It isn't too late for you. I actually think that this company will continue to outperform in the quarters and in the years ahead, not only because of the fact that people will be buying lots more electric vehicles, although that is one of the key reasons why I think that the stock is going to continue to go up. So I would recommend having exposure to a copper mine such as this, as opposed to buying into a highly inflated, overvalued company like Tesla, which has got all this debt and all these other problems, and you want to really be buying into something that perhaps is a little under the radar, not everybody knows about it, but the fundamentals of the company are far more sound than they are in the case of Tesla. So as we look here, we've got an image. This just shows us a little bit more about, this is really from the investor presentation, I believe, This copper sales, look at how much these figures have gone up this year. They've really beaten the July estimate in every case. And that goes not just for the fact that they've spent less money than they thought, but they've also generated more sales of gold and copper than was expected of them. So this is actually pretty decent news for the company, and this is why they're performing quite well. As we go down this article, we've got a really interesting slide here. Let's just check this out. This shows us what happened to the copper price during the last bull run. So we saw it peaked massively, went up really high. Could we now be in the early phase of the next bull run upwards in copper prices? We see here that Freeport's share price went right the way up to $60, so it increased fivefold between the end of 2008 and the end of 2010. In the case of copper prices, they went up about threefold, from $1.25 up to $5 in the same time period, which means that the two are loosely correlated, or probably directly correlated, and it appears that Freeport benefits proportionately more when copper prices increase. It's a reasonably useful proxy for what will happen in the future. At the same time, there are plenty of other high-quality copper miners out there, so Freeport is by no means the only one that's good quality. So the idea of this video was just to give you an update on my thoughts. I would certainly be more inclined to purchase shares in companies that have exposure to copper. So all of these electric vehicles are going to need copper, and in the previous video about Freeport, I included a graph which shows the likely increases in copper demand between now and 2027. So who cares really which of these EV manufacturers wins? Let them fight it out amongst themselves. I just think it's far better to have exposure to a copper producer because they supply not only electric vehicle manufacturers but also people who maintain power lines and power infrastructure, as well as far many other industrial uses. So don't be thinking that you have to buy shares in an EV manufacturer. Sure, they might go up in price a lot, and maybe Tesla does have a lot of high quality competitors, but wouldn't it be much better to exploit the possibility that commodities are going to be in scarce supply in the future in the face of increasing demand? And this is very much a wide moat opportunity. Anyway, those are just some thoughts on it. If you want interested in more about the copper producer that I just referenced, why not check out my other video called Copper Boom, in which we go into more detail about it. Thank you very much.